Welcome to the Fear and Greed Business News Afternoon Report for Friday the 9th of August 2024. I'm Sean Aylmer. Every afternoon we've got the 5 stories that happened today that you need to know about. Story number 1, the S&P ASX 200 jumped 1.25% today to close at 7,778 points. In fact, it was 7,777.7 points to be exact. It followed a strong lead in from Wall Street overnight. The rally in the US reflected data that alleviated fears about the world's biggest economy falling into recession. Gold, oil and Bitcoin all rallied as well. For the week, the ASX 200 finished down 2% after the big drop on Monday. Among the large caps today, higher iron ore prices helped the big miners, with Rio, BHP and Fortescue Metals all outperforming. Goodman Group was another strong stock, alongside with Woodside Energy and WiseTech Global. Wesfarmers was one of the worst of the large caps. In corporate news, Life 360 shares jumped by as much as 20% to a record high after posting a 20% rise in revenue. The US-based tracking company saw a 25% year-on-year rise in subscription revenue, adding 132,000 more paying customers. Now, the company has about 2.4 million active users in Australia. That's different to paying subscribers, mind you. It's got more than 70 million users globally. Whitehaven Coal, it was out saying the High Court had rejected a Green Group appeal for special leave about 2 of its mining projects. The legal challenges have been going on since 2022 and led to plenty of delays in some of its coal mines. Story number 2, Australia will be able to accept nuclear material from the US and UK as part of an updated AUKUS agreement. The update was signed off during AUSMIN meetings in the United States this week. AUSMIN, of course, is the annual talks between Australian and American defence and foreign ministers. Under the agreement, Australia will be allowed to take in nuclear material for the procurement of nuclear submarines. The terms of the original deal in March 2023 only allowed for the exchange of information about nuclear propulsion. Defence Minister Richard Marles said the new arrangements provide the legal underpinning of what was agreed with the US and UK under the AUKUS banner. He said the agreement signed did not mean other AUKUS partners would be able to use Australia to store its own nuclear waste. As part of the AUKUS agreement, Australia will acquire 3 Virginia-class vessels from the US before Australian-built nuclear submarines begin operating. Story number 3, News Corp reported an 8% jump in profits to $1.5 billion off revenue of just over $10 billion for the last financial year. Earnings from its majority stake in online property group REA was a highlight. Its book publishing arm, HarperCollins, also did well, as did Dow Jones. That's the publishing business, which includes the Wall Street Journal. The weak parts of the business, including the news media segment, that's its operations or part of its operations here in Australia, and lower revenues at its US online property company. Chief Executive Robert Thomson said last financial year delivered robust earnings and included significant steps to prepare the company to prosper in an artificial intelligence world. Meanwhile, REA share price jumped more than 6% following a 20% rise in underlying profit. News Corp's share was also up nearly 7%. Story number 4, QBE Insurance's share price fell more than 2% today after doubling its net profit in the first half of this year to $802 million. It was a great result compared to last year, but fell short of expectations, hence the sell-off. The result benefited from lower levels of natural catastrophe losses while still being able to push through premium increases. The good news for we customers is that insurance premium growth is expected to slow on the back of increased competition and fewer natural disasters. QBE writes 2/3 of its business outside Australia. It also said it had done a deal to offload its long tail of claims in North America. Chief Executive Andrew Horton said the insurer was facing more competition in its global business, with a recovery in Australian insurance markets also tempting global insurers back into the local market. And story number 5, retailer Nick Scali has recorded a near 20% drop in full-year profit and reduced dividends as shoppers hold back from buying big-ticket items. The furniture retailer is always one of the first consumer discretionary stocks to report, and based on a sample of 1, things in consumer land ain't so good. That's, of course, due to high interest rates and cost of living pressures. Mick Scarley said shoppers had delayed buying big-ticket items like furniture, and the group reported an 8% drop in revenue across its 128 stores in Australia and the United Kingdom. It also warned that trading in the UK, where it owns Fab Furniture, is expected to deteriorate. Its share price finished down 2%. That's it for the afternoon report for Friday the 9th of August 2024. Guest judge Jen Duke, Michael Thompson and I will be back tomorrow morning with a weekend edition of Fear and Greed Business News. I'm Sean Aylmer. Enjoy your evening.